Hi, in this chapter, we are going to learn about the financial institutions that borrow us money to buy property. When it comes to buying a property, you can either buy it with cash or taking up a housing loan. You might be asking who going to save such a big amount of money to buy a property at a few $100,000, right? Yes, there are always people who buy property with cash, and most of the time they don't actually save to get that big amount of money. Where they get the money is often from the money they obtain from selling other assets such as their shares, houses, and lands. And some might get from inheritance from their family, their parents, and some might get it through the money they made from business deal or commission. And of course, they might also get it from the winning money through the lottery, okay? But anyhow, that's not our main discussion today. Majority of the Malaysian buy property by taking up a housing loan, and that's our discussion today. The other name for housing loans is called mortgage, M-O-R-T-G-A-G-E. But we usually don't use this name because it's better for us to use the wordings that most people can understand, which is housing loan. Simple as that. According to bank standard in Malaysia, we can only finance our residential property up to 90%, meaning to say we have to pay 10% cash as a down payment. Assuming a property worth 300,000, we will have to pay 30,000 cash as a down payment and the balance 270,000 with housing loan. We can either get it from KWSP, our saving, or any sources that we have. Two main players in Malaysia provide housing loan to Malaysia. First is conventional banks that all of us familiar with, such as Public Bank, Maybank, RHB, Hong Leong Bank, CIMB, Alliance Bank, Bank Islam Bank, Muamalat, Bank Simpanan Nasional, Bank Raya MBSB, and so on that you are familiar with. The second is what we call LPPSA. Full name is Lembaga Pembiayaan Perumahan Sektor Awam. Yes, this LPPSA only offer loan to government servant, and government servant is the people who work with the government permanently. The first thing you need to understand and memorize in this lesson is the differences between bank loan and LPPSA. Let's go into detail now. The first difference is their interest rate. LPPSA offer a 4% fixed rate. The monthly principal and interest payment never change from the first mortgage payment to the last. Whether the market interest rates rise or drop, the borrower payment does not change. Unlike LPPSA, banks typically offer adjustable rate around 2.8% to 3.5% based on today's market, or we can say 3.2% on average. The interest rate under this package fluctuate with the market interest rate. If interest rate increase, the borrower need to pay higher monthly payments. Interest rate could also decrease, making the monthly repayment less expensive. In either case, the monthly payments are unpredictable. Although the rate is adjustable, it does not adjust very often unless there are major changes in the economy. And in general, the adjustable rate is much lower than a fixed mortgage at the beginning. Well, different banks can offer different rates, depends on their appetite. Let's say if the bank desperate for sales on that particular month, they will offer you a better rate. Also, if your profiling is very good and they think you are less risky, banks will offer you a better interest rate. Do banks offer a fixed rate? Yes, they also offer a fixed rate. Some banks do offer fixed rate, but is less favorable by market. Although fixed rates sound more predictable and less riskier, the offer interest rate usually start at a higher rate. For example, a 5% fixed rate compared to a 3.2% adjustable rate. Which one would you choose? Next, the difference between LPPSA and bank offer is LPPSA offer up to 100% loan margin. Means you no need to pay any down payment. And each government servant can apply up to 2 times LPPSA loan in a lifetime with the condition that number 1, your LPPSA loan quota is sufficient. Second, your monthly installment amount cannot exceed 50% of your current salary. And the third, you must do full settlement on your first LPPSA loan before you start to apply for your second LPPSA loan. You can either finish paid your first loan, sell it, or refinance the LPPSA to bank loan before you apply for the second one. And while for banks, the good news is there's no limitation on how many housing loan you can apply for. However, the loan margin for the first and second FD loan is only 90%, followed by 70% loan margin for the third active housing loan and onward. If you are a first-time home buyer, you can also apply 100% loan margin under the scheme called Scheme Rumah Pertamaku, in short form SRP. The third difference is LPPSA only applicable for people who get permanent employment status from the government. Those who are under contract are not permitted. There's a document called Surat Pengesahan Jawatan Sah that confirms their permanent employment status. While for bank, there is no restriction on whether you are government servants or in the private sector. You can even apply loan even you are under contract employment status. The only concern is, unlike LPPSA, the bank is running by business people and they can freely choose whether they want to borrow you the money. To understand better, we need to think like a bank. Banks love people who have lesser default rates. What is default rates? Default rates mean people fail to pay their housing loan installment. So some industry is less favorable by banks. For example, people who work under travel industry such as airline, hotel, or supplier that are related to the travel industry, etc. This refers to the current COVID pandemic situation where this group of people have a high chance of being laid off. Also, banks don't like risky industry like those who work offshore at oil and gas industry. This is mainly because most of them are contract basis, and the high volatility in the international oil price also increase the chances of the contract unable to renew. Other careers that are less favorable by banks are lorry drivers, sport player, etc. Banks' appetite change from time to time and they do not have a clear guidance on this. So we will discuss further in the later chapter on how to get this group of people to get their housing loan to approve. Next, how long can they borrow the housing loan? LPPSA is very straightforward. You can borrow a maximum 35 years for your first LPPSA loan and 30 years for your second LPPSA loan with no age limitation. The only requirement is you must get your loan approved before you retire. There is a concern by most LPPSA applicants is the insurance cost. The older you apply your LPPSA, the higher the insurance cost that you need to pay because of your risk level. The smart way to do it is to apply your LPPSA loan as young as possible. While for banks, the maximum loan repayment period, also called tenure, TENURE, that you can apply is 35 years maximum or 70 years old, whichever comes first. For example, if you are 30 years old right now, you can apply up to 35 years loan. Or if you are 45 years old right now, you can only entitle up to 25 years loan. To check whether you can afford the housing loan, both LPPSA and banks have different methodology. LPPSA only concern our income and commitment that are shown in the payslip. Those commitments that did not auto-deduct in the payslip are not considered in the calculation. Unlike LPPSA, banks will consider your commitment that show in your secrets. What is secrets? The full name of secrets is called Central Credit Reference Information System. This is a system created by our central bank, Bank Negara Malaysia, to standardize the credit reports on every Malaysian like you and me. It tracks our loan repayment behavior for the past 12 months. This report consists of the data on your outstanding loans such as the type of credit facilities, payment history, installment amount, and credit limit. The bank approves our loans based on our credit scoring. We will also discuss this in much detail in later chapter. The last difference that we want to discuss is the type of loan that they offer. LPPSA offer only term loan, while bank offer more types of loans such as term loan, semi-flexi, and full flexi loan. Next chapter, we are going to study the structure of loan engine, and we will also learn how to calculate the borrower net income. Stay tuned.